Hey everybody, today's video is on execution types and it's a video I've been meaning to do for a long time. I believe if you are not using these execution types and you start to integrate these into your trading, then it will give you a massive leg up, guys. These sort of execution types can save you a lot of money on fees, get you more optimal entries. And yeah, highly recommend watching this video till the end. And I guarantee if you're not integrating these strategies already, it will massively up your game. So I've just put together a small table here to explain everything, guys. So you can see up here on the top title section, we've got order type, aggressive setups, non-aggressive setups, and take profits, okay? Then on the left-hand column, we've got market, simple limits, chasers, and scales. I've highlighted the market order in red, and I've highlighted all the limit orders and the types of limit orders in green here for you guys, just to make it a little bit more simple and easier to understand. So let's start from the top, looking at market orders. All right, so when do we use market orders? We use them on the 15-minute and anything under when trying to catch fast plays such as a breakout. Okay, so you can see this is in the category of aggressive setups. So if I'm playing something like a breakout that could potentially run away from me if I don't get in time, then I'm looking at using market orders on the 15-minute time frame and anything under, for instance, the 5-minute time frame, the 1 minute, just because I don't want to try and get in, I don't want to prioritize fees. At this point, I'm just trying to get into position, ride the trade, and that's pretty much my main priority. You can also see here that I've put down use as hard stops. So regardless of the setup, whether it's an aggressive setup such as a breakout or a non-aggressive setup, for instance, such as a divergence, then I'm using hard stops in both instances in the form of market orders. So just to reiterate, if I am trying to catch a fast play such as a breakout, then anything on the 15-minute time frame and under, I will use a market entry. But you can see over here that that's just for lower time frame entries. I don't use it at all for non-aggressive setups apart from stops, and I'll never use a market order for a take profit. Next, on to limit orders. So you can see here, simple limits. I basically just put this in just to show you guys because the two most common order types are market orders and limit orders. Simple single limits I never use. So you can see aggressive setups, non-aggressive setups, and take profits. Simple limits are used in none of these instances. That being said, I do use forms of limit orders, so we can get right into that. And these are the two unique execution types that I want to sort of impart in this video, okay? Just quickly, before we move on to these order types, I'm going to take a quick minute to ask you guys to please like and subscribe. Any support and engagement with the channel is very much appreciated. Also, if you have any requests for future videos, please feel free to hit up the comment section and I'll be very receptive to incorporate them into future content. Now, first on the list, we have chasers. Okay, guys, so if you have never heard of chasers and you're currently using market orders for most entries, then this is going to give you a huge edge. Essentially, what chasers do is they basically just trail behind price to a very, very small degree. And essentially that trailing order is adjusted dynamically to chase the price. And essentially that shadowing of price as a limit order is intended to fill at the most optimal fee positioning. So if used correctly and in the right context, you can basically enter into the position what would be normally at market, but instead of paying taker fees, you're getting the maker fees, okay? Because you're entering there and then, but you're not entering there and then via a market order, you're entering via a limit order. Now, this type of entry is particularly beneficial for larger traders who don't want to impact the books too much with market orders, but vice versa, guys, these chaser orders will help you whatever your size. The fact that you're skipping the taker fees entirely and in fact you're making fees back on the maker fees is hugely beneficial, guys. And honestly, it may seem like small fee percentages here and there, but over time, these really do compound. And yeah, I'm a huge advocate of chaser entries, okay? That being said, it's not the perfect solution, okay? And sometimes you do get left behind because essentially, if you do need to get in extremely fast, something that's a fast moving play, an aggressive setup, some sort of breakout, then in some instances you will want to mark it in, especially on the lower time frames. And yeah, you can see I've put a note here just saying for aggressive setups, I use chaser orders on the 30-minute and anything over for entries. Like I said here, the 15-minute and below for aggressive setups would be market. But guys, these are just my parameters. So I encourage you guys to play around with these orders on different time frames. It's also particular to your system as well. But generally speaking, if you do need to get into somewhere on the lower time frames, you can mark it in. But for me, I found the 30-minute plus a sort of nice entry point for chasers. And if I'm looking like, for instance, trading a 4-hour setup, then I'll 100% always be using a chaser, okay? And just another note you can see here, okay, it says that I use to chase out of positions when wanting to cut early. As you can see up here, I do use hard stops, okay? So when I'm in a trade, as soon as I enter the trade, I place that hard stop. The trade's always been premeditated in terms of risk reward. So I know exactly where I want my hard stop placement to be. But in instances where I do want to cut the trade early, it's not going to plan, it's not looking favorable anymore, and the odds of probability of the trade playing out to my direction have dramatically reduced, then I will use a chaser to chase out manually, okay? Again, of course, you share the same benefits by doing so. You don't get stopped out at a sort of disadvantaged position and paying the fees on that. Instead, you essentially slip out of the position and you have more favorable fees in doing so. Now, in terms of non-aggressive setups, you can see that pretty much all my entries are used via chasers, okay, for obvious reasons. And again, shares the same set of rules in that when I do want to cut positions early, I will use chasers to do so in a way that benefits me. Okay, so on to take profits. You can see that before it did say almost always here, but I've just changed this to occasionally. I do use chasers oftentimes to take profits. Essentially, say for instance, I'm in a long position and we're taking a range low to a range high. Price comes up, sweeps the range high, then closes back underneath. That would be a position I'm monitoring, has given me the sign to get out, and I'm doing so, but instead of pressing market, I'm pressing close via chase order. Now, again, this is the same thing as exiting at market, but just with a more favorable fee structure, provided price doesn't nuke instantly from there and just ticks up slightly to fill my ask. Next, we're looking at scales, guys. Okay, so what are scales? It may actually be beneficial to pop over to a chart quickly so we can go through this on the chart so you can see exactly how to use them. Okay, so let's say we're looking at this hourly bearish order block in here, right? So we've marked out our order block. And for whatever reason, based on our systems and strategies, we feel like there's a very high probability that when price moves into this level, then it's going to reverse. And as a result of that, we want to be placed on the short side. Now, as in this instance, we're just taking the short trade off the back of an order block. And there's nothing we need to see in real time in particular. We're not looking at footprints and order flow. We just want to take a trade on the short side based off this order block. Then what we could do is, as opposed to setting just one limit ask at the base of the zone, we could set multiple asks at multiple price points. And that's essentially just what scaling is, okay, guys? So let's say that, we're basically looking at this order block. We reckon that at most price will sort of penetrate, to half the way through the order block. Then what we could do is just set our scaled asks, and we could do so like so. So we have multiple asks at multiple price points, and essentially what happens is when price moves into this level, it will average you up as the asks get filled. And of course, do so by limit, so you're getting more favorable fees. Now, my system in particular isn't too inclined to use scales so often. Essentially, that's because I want to be seeing certain things happen in real time to action my trades. So if we just flick back to our table, you can see I've written, occasionally we'll set scaled traps ahead of time, but not too much ahead of time. and have to see what I call a holy grail setup to do so, which is a divergence forming above or below a sweep level with a demand or supply zone the other side of that level. So as you can see, guys, I will potentially set scales, but for very confluent setups. In this case, we have a divergence, a sweep, and a liquidity zone such as supply or demand. Now, the reason I say not too much ahead of time is because one of these criteria does have to be determined closer to real time, and that's the divergence forming. That being said, guys, this is just my trading style. So, if you think it would work for you, then give it a go, play around with it, and you might just find it slips you into tighter positions through averaging in, okay? Looking at non-aggressive setups, it's the same thing for me personally, same as for aggressive, very rarely, and only if I see a holy grail setting up, even then I won't scale 100%, 50% max, okay? So for me, even though I see something, if I were to see something that was really heavily confluenced, such as this holy grail setup, even in that case, for me, guys, I'm not going to put 100% of my installments into those scales. If I really back the setup, then I'd probably scale max 50% and then still be monitoring the entry, looking at the order flow, and looking to take the remaining 50% upon potentially the order flow, but most likely waiting for the order flow to present itself and then getting some sort of confirmation. Now, if you don't know what I mean by confirmation, then, in this instance, it would be the sweep, okay? But it's, of course, contextual to each play. But where I do use scales a little bit more often is for take profits, okay? So I've written here occasionally as initials into either key supply or demand zones or past a sweep level. These are normally set as stink TPs, especially overnight when I'm asleep. So let's, for instance, imagine we are long positioned and the asset we're long positioned is range bound. Let's say it's in the lower end of the range and we've got quite a distance to go until we break the range highs. What could be a nice thing to do in that case is essentially just set some scaled asks above the range high. And I like to do things like this before I go to sleep because essentially I know that if price gets to my asks whilst I am asleep, then it basically would have done so very aggressively, which would have been an inefficient move. And the likelihood of it then carrying on past the range highs is very slim, in my opinion. Now, if you want to know what I mean more by this, then you could probably dig into my speed, inefficiency, and compression video in the technical analysis series. But yeah, just off the top of the dome, that was an example of how I'd set some stink TPs in the form of scaled orders. Now, the next question is, where do I use these execution types? And for me, it's in Insilico terminal hooked up to my Bybit account. I do actually believe that Bybit started integrating chasers and scaled orders into its platform itself, but I had a quick play around with it, and there are certain functions and benefits that Insilico offers that Bybit aren't still quite up to scratch with. For instance, as I was talking about, using a chaser to immediately close a position, and something else called the designer function. So it's quite a nice thing to use, especially as a sort of preventative means to stop you fat fingering into a position. But you can just click this designer button up here, and this will then lay out onto the chart exactly what your orders would look like. Okay, so it's nice to use, for instance, for scales. So we've got designer, scales, and then you can just click on the chart and say you want to pull your scaled orders across this zone here, for instance. And there are certain other functions you can play around with. For instance, here it says total orders. So at the moment it's set to 100. If I wanted to change that to 20, for instance, it would then thin out and start looking like this. And then you can also play around with things like price distribution. So at the moment it's set to even, but if I just tip the scale here a little bit to higher, you can see that now all the orders are skewed to the top half of this zone here, and vice versa. If I bring it right down to the lower end of the distribution, we have it in flip reverse, okay? So before we move on, guys, let's actually put one of these down so you can see I've just tweaked around here, and we've got 0.1 ETH at this level here, 10 total orders, even distribution. And there you go, you can just click short and you've got your orders set up there, okay? So essentially, if and when price comes into this level, If it were to fill all of these asks, it would give you an average right bang in the middle. And yeah, for obvious reasons, guys, it's a very dynamic form of using limit orders and is certainly something I recommend playing around with. Now, before we wrap up, just to show you quickly how to use a chaser. So you go up here, limit scale, click chase. You want to have until fill or cancel toggled. And let's say, we were seeing a bearish divergence forming here on the 4 hour, and we've seen all that we need to see. We've seen some negative flow as well. And essentially we just want to be in position on the short side, but we don't want to mark it. What we do is make sure we have everything set up here. So your size, until fill, cancel toggled, and then you just click the red button. And as you can see, it happens super fast. In this instance, operated just as a market order would, but of course we're doing much better on the fee side. Now, if we wanted to close out this position, we have the function down here, close, and then via chase. So we can press that. And again, we're back out of the position, okay? So there you have it, guys. This is the end of the video. I hope you garnered some useful insights and information. There's a brief overview on some advanced execution types and how I use them. Very much recommend setting yourself up on a terminal such as Insilico. This one's free to use. You just hook up your Bybit account via API. And yeah, just have a play around with it, guys. Over the years, I've saved a huge amount of fees using orders like this, especially via chasers. And yeah, just another way to up your edge, guys. So that's it. Hope you enjoyed. Please leave comments below on what you'd like to see in the future. And yeah, happy trading.